p.m. UTC, 6 p.m. CET. So it's time for our little live stream today. I just want to give the chance to a couple of people that probably still want to join. So I'm going to play a little bit of a countdown for you, then the intro, and then I'm going to be right back with some nice trading today. See you in about a minute. And here we are again. Welcome to today's live stream, coming to you live here from our Berlin studio of the Prime Expertise Trading Academy. We want to talk today, after I've talked so many times in the past really weeks about, you know, what is the general situation at the moment on the markets and so on and so forth. How is like the long-term positioning? What phase are we currently in the markets? I thought it's a good idea to also talk more about short-term trades. And this is what I want to do here. So I want to show you a little bit my thought, my spin on what I'm planning trading-wise here for the rest of May, and especially also June. So we are more in the so-called maybe midterm, short-term swing trading territory here. And I hope maybe I can inspire you a little bit there. As always, of course, feel free to just ask your questions here live on the chat. If you're watching a recording of this video, of course, you can also post your question in the comment. I'll make sure to answer them. I can see there are a lot of questions and highs and so on already coming in. Hello, everybody. Seeing a lot of familiar faces there again. Especially my favorite, Chucky the murder doll, is there again. How are you doing, Chucky? So I'm just going to jump right into it. Maybe talk a little bit first about like my general approach when it comes to trading at the moment, to my swing trades, so to say. I've prepared quite a lot of charts here, but I don't want to bore you to death. I want to keep it really short. Maybe I'll talk like 15 minutes, 20 minutes about what my plan is really in different asset classes here. And then we can jump into the question and answer. So if you have like a trading position that is hurting yourself at the moment, if in general you're just unsure what to do at the moment, post your question here. I'll do my very best to answer as many questions as possible, of course. Alrighty, good. So let me just see, where did I put my charts? So at first I want to, and this is also something I posted in the Telegram group. So if you're not yet a member of the Academy, the Telegram group, you should check out the links in the description of this video. You'll find one link leading to more of a general group where I post my thoughts about the markets, maybe like 4 or 5 times a week. So don't worry, I'm not going to spam you there. Then there is a link also to our brand new Trading Insights group, really where I post trading alerts, I want to call them. So every time I get, based on a couple of my setups, an alert on a chart where I think like, okay, this is a chart I need to look at, and then decide, do I want to take a trade there or not? I share those also. You can get those for free also, as always, as everything we are doing here at the Prime Expertise Trading Academy. And I've just been informed also, if you ask a question tonight, you can win a trading voucher of $25. So that's kind of nice. You never know, I mean, $12 in Shiba Inu were turned into $1 million. So maybe this is your time and place now. All right, good. I want to start here more with a general layout here on Bitcoin and the S&P 500. And I know some of you probably say, no, oh God, he's going to talk about Bitcoin. He's talking about the S&P 500 again. Why am I doing this? Because I think those are the two risk-on charts or risk-on asset charts you need to understand, because if you kind of have a grasp on where do we stand with Bitcoin at the moment from a technical view, where do we stand in the S&P 500 from a technical view, the same applies to the Nasdaq, by the way. You have pretty much nailed 90% of the charts that are out there. So not so much a big fan like, going into a Litecoin chart or a Ripple chart or something, trying to analyze that, because they are all just doing what Bitcoin and what Ethereum are doing by the end of the day. How you can utilize Bitcoin and Ethereum against each other, I want to show you a couple of tricks later on, because I think there's a nice trading setup as well at the moment. So let's start here with Bitcoin. And yeah, it is what it is. It's a boring market. Even what we saw here last week was 1, 2, 3, 4, 5, 6, 7, 8 days in a row of red candles. That didn't do so much. Yeah, it brought us down here from, let's say, almost 30,000 to the low here at just roughly underneath 26,000, 25,800 something was the low here. But still, for Bitcoin and for 8 days in a row with red candles, that's not a crazy volatility. Crazy volatility for Bitcoin is like, when we zoom out a little bit, what we saw here when we jumped up just in a matter of days here from 20,000 to almost 29,000 US dollars. So I think it's safe to say we are in a bit of a sideways move here. And whenever we see the sideways moves in Bitcoin, it's just a matter of time, of course, until we see the volatility break out, either to the north or to the south. Now, the good news is it seems like Bitcoin, despite all the stuff that is going on currently with the blockchain being a bit congested because of meme coins that are printed on this new Bitcoin standard. More on those meme coins, by the way, later also, if you want to know a little bit more about that. And it's very stable. It's underperforming the S&P 500 for sure. So if we look here at the S&P 500, we can see today we try to capture a new height here, and normally they like to move like into one direction, but at the moment Bitcoin is underperforming, or the crypto market as a general is underperforming the S&P 500. So what to do with this? I think there are two things that are noteworthy here. First of all, we should also maybe put a resistance here, or maybe here. It's technical analysis is always a little bit of an art. It's not so much of a science. It's just that you roughly know, like, okay, this might be an area where there's trouble ahead. And I would never, by the way, go all the way here to the wicks, always where the body ended. So there's pretty solid resistance. 30,000 as to expected. I mean, those are the round numbers, they always have a little bit of resistance or a lot of resistance. They have a lot of support. We saw the same down here, when we were at 20,000. By the way, let me make my chart bigger for you guys. Here we go. Sorry, otherwise you cannot see so well. Here we go. So my game here at the moment is, and this is about swing trading. It's nothing to do here with my long-term perspective, where I'm a very outspoken advocate on use this year to accumulate more Bitcoin. It can go up to 45,000. We might also go down to 15,000 or even lower still. Whatever the price, use it to accumulate long-term. But when we are talking about trading positions, I think really what the area to watch right now is like this area here between the yellow moving average, which is the 100 days moving average, and then we have this nice line up between the 50 days moving average, the blue line here, and with support at roughly 28,700, 28,500 US dollars. So what I'm doing here at the moment is really, when we tick down here, is this, here we go, again to the 100 days moving average. This is where I would be interested in looking for buy opportunities. You can do this with a limit order, by the way, which currently would be like, let's say, 26,000, 26,300 US dollars. Why do I think this is an attractive range to buy or attractive price to buy? Because you can place your stop loss here roughly under 25,000 US dollars. So you have more upside potential to the top here than you need to risk. Probably a risk reward ratio of around about 1.4, 1.5. So you can win more than you can lose. On the contrary, and actually this is more my favorable trade at the moment, to look for areas to short Bitcoin here, because we have here the 50 days moving average and a natural zone of resistance, I want to call it, lining up here very nicely. So should we maybe see a bounce back now, and that can be very fast, to this area between that is here 28,500 US dollars, 28,800 US dollars. This is where I would look for short positions. Stop loss for those these are swing trades would be then roughly here at 30,600 US dollars. Take profit down here at 25,000 US dollars. When we reach here 26,000 US dollars, then I would put my stop loss to break even here. So this is on Bitcoin. If you go here to the S&P 500, a bit more interesting at the moment. I want to zoom out here a little bit because I've been talking very, very long. Yeah, some of you I know have been watching my videos and streams for quite a long time. So first of all, thank you for that. Very much appreciate that. Every single viewer out there. And maybe you remember last year in September, I started talking about market should turn around slowly. We are going to have a soft landing zone somewhere between 3,400, 3,600 points. And I think I was pretty spot on this. Also, I mean, this is a chart analyst stream, really. Yeah, the S&P 500 moved above this long-term bear market trend, the yellow line here, which started here in January 2022. We tested it again. Were deflected, moved up again, and then now we have this area here around roughly 4,200 points that seems to be very difficult to overcome. We tried it again today. For the moment, we are deflected again. So this actually would also be here for a very, very short-term trade, a nice area maybe to try to sell here, have your stop loss maybe here up here at 4,250 points. In the hopes, that the S&P 500, let me zoom in here a little bit, goes down to test here the 50 days moving average, which currently sits at 4,075 points. So also what my favorite scenario here really in Bitcoin is, the same applies here to the S&P 500. So these are, this is at least what I expect now for the upcoming days and weeks. I would be surprised to really see the S&P 500 going very, very strongly above this area of 4,200. If we do, what you can do then, of course, is you can play it the other way around. If we close above this area, maybe go a little bit higher, you wait for the prices to come back, and then you would buy at this, what was formerly the resistance here, then in case would here be a support zone. So all a game of risk and reward and risk and chance, so to say. No. One more thing I want to show you about cryptocurrencies here is Bitcoin dominance. Also, if you've been watching this for a little bit longer, you saw me also since last year, September, October last year, seeing that I want to see Bitcoin dominance between 46% and 50%. We were there now, almost touched here 49%. So this is picture book, really the setup for a new bull market. And this is so great. And that's why it's so important at the moment to also for your long-term portfolio to start accumulating, because it lines up, in my opinion, all perfectly. So next year in end of April, by the looks of it now, we are going to see the next Bitcoin halving. We are seeing at the moment that the interest rate in the United States, which is the orange line here, is at 5%. Potentially maybe will go to 5.25% in June if the Fed decides to raise the interest rates one more time. We have inflation at 4.9%, so interest rate is higher than the inflation rate. And if you look here, what happened last time when we had this scenario that inflation rate went down and interest rates were higher, you saw that it was close to a plateau. And this plateau meaning like this is the terminal interest rate, so to say, usually, sorry, this picture has a low pixelation. I know that lasts somewhat between 2 months if it's very quickly, and 15 months. Last time in 2019, it lasted 7 months. So if we now forecast 1 year into the future to the Bitcoin halving, there's actually quite a high chance that by then we are going to see interest rates coming down again. And throughout the year, this is going to fuel slowly the new bull market, in my opinion. That is, of course, if there's no black swan event interfering with our plans. But I mean, even like last time we had shortly after the halving, or was it before the halving? No, I think it was after the halving. We had Corona taking action for the first time, and still we saw a solid bull run. Of course, we would have wished that the bull run could have been a little bit more aggressive, and Bitcoin maybe would have reached 100,000 US dollars. But you know, it is what it is. As a trader or as traders, we need to work with what the reality is, and of course not what we wish to do. But the accumulation phase really, and I can only highlight this, guys, this is important. The further we get down into the year, probably the more important it's going to be on the long side of the market, especially when it comes to Bitcoin. And in the meantime, and I think this is quite an interesting setup at the moment, I'm looking here at the Altcoin season index provided by intothecryptoverse.com. I highly recommended page when it goes, if you want to dive more into quantitative analysis. They have this great index called Altcoin season index, which basically just investigates how is the performance of Bitcoin in comparison to the top 50 altcoins. And we can see in the last 90 days, altcoins that had a higher return on investment than Bitcoin were only 3 out of those 50, lesser than Bitcoin 46. So this is a Bitcoin season. But you also can see here, every time we are in this very low territory of Bitcoin season, it's just a matter of time until altcoins outperform Bitcoin again. And the great thing is with a trading pair, for example, here, like, let's go to, oh, actually, I have this one here as well. With Ethereum versus Bitcoin, for example, you can trade something like this. And it doesn't really matter if the whole crypto market is going up or down, because you are just trading a ratio between what in Bitcoin do I need to pay for 1 Ethereum. Excuse me. And I think at the moment, this is really the time to maybe think about or watch out to search for long positions here, meaning that you will end up paying a little bit more Bitcoin per Ethereum. So this one very in the past failed me, honestly speaking. It doesn't matter that it has to, I mean, it doesn't say that it needs to go up right away, but this is like a great trade, you know, when you do not want to take the directional trade, when you do not want to play the S&P 500 or euro dollar, the dollar index, or Bitcoin US dollar, so anything related to fiat currencies, you can play a ratio, and you don't really need to care about, you know, is Bitcoin in denomination of US dollar more worth or less worth, because you are playing a ratio here. So this is one of my favorite trades at the moment. I'm really looking there for a nice entry. Things are lining up here. If you are a fan of triangles, you can also see that we have this forming here at the moment, definitely, and actually has been in the making for a little bit longer time. So I think I'm not a big fan of those triangles. I think they are overused, especially by influencers, by the way. But I think they illustrate quite well, you know, there is something going on. We are going to see a breakout to the north or the south. And if I look here at the Altcoin season index at the moment, I think this breakout could be to the north, actually. Okay, what else? I've been talking already for 20 minutes again. Unbelievable. Did I forget something? I don't think so. So let me drink a quick sip of coffee. And then we can see what questions you guys have. And there are already so many. Awesome. I'm just going to start here at the bottom. Yeah, here from Diego, who also is, I think, a long-time watcher already of that crypto show. So thank you for that, Diego. Asking, in the worst-case scenario of Bitcoin going down, what do you think is the lowest low it could go to before going to the moon? That's a very good question. And Diego, always what I'm going to say now, please take this with a grain of salt. I'm also, of course, not knowing where exactly is going to be the bottom, where exactly is going to be the top. A lot of traders, especially beginner traders, are a little bit obsessed with that. Oh, I catch the lowest price or something like this. This is in stark contrast to what a professional trader does. You don't really care about where's the absolute bottom going to be, where's the absolute top going to be, because nobody knows that. And media is full of course, people who claim to know that. But let me tell you, nobody really does. What helps me always is, and this is the quintessence of what traders are doing, you're looking for a repetition of patterns. And if for me, and I've said this a lot of times, I think over the past couple of months already as well, I'm always looking, I'm right now looking at how is the price behavior in the last 18 months prior to the halving. And also this is something we started, I think, in October when I mentioned this, also where I said, this could be a good area now to start buying Bitcoin. Of course, back then we were still at 20,000. We went down all the way to 15,500. This is the example for that you cannot forecast the absolute button. But what I want you to see is that there can be two things happening normally in those 18 months prior to the halving. You can see a sideways range with a bottom again. And this is what happened here prior to the halving of 2016. And wait, yeah, I made my screen big. Okay. So you had kind of a sideways wave, and then suddenly it ticked down here, which in this case was Bitcoin ticking down to 150 US dollars, just to then blow off again and make a top here just 3 months after this at 400 or 500, 475 to 500 US dollars, so tripling in price. And I thought actually that what we've seen here before resembled a bit of what we saw prior to the halving of 2020, where we had a bit of sideways range and then the market going up. If prices stay around this area here at 27,000 US dollars, I might be proven wrong with this. But the quintessence of this is be prepared for high swings to the upside and downside. And you just need to look here prior to 2020. We had this great swing up here from around about 3,000 US dollars to 14,000 US dollars. So, I mean, that alone was like 4.5 times, 4.5 X, just to slightly go down and then here with Corona ticking coming in here, this huge candle we saw were also almost to 3,500 US dollars. And be prepared to see something like this as well now. So we could very well see something like, okay, a bit of sideways range, or maybe like a tick up, 40,000, 45,000 US dollars, just to slump down again to 20,000, or maybe even lower. I wouldn't be surprised if we test the 15,000 again. However, long term, this is not something I want to prepare for. If I want to invest in Bitcoin, if I want to prepare for the next bull market, and let's say I have 10,000 K I want to invest, I'm not going to throw them all in right now. What I'm going to do is I'm going to stretch that investment maybe in 10 times 1,000 US dollar over the next 10 months. because I don't know, are we going to see this uptick? Are we going to fall down again, where everybody's going to have the FUD going like crazy again, that Bitcoin is going to zero, and so on and so forth? One thing I'm certain about is, yeah, we are going to see a new bull market. And I think, and probably this is also a question a lot of you guys have, that the target is going to be somewhere between 100,000, which in my opinion is very conservative, and 300,000 US dollars. I'm tending more towards 300,000 US dollars, but you never know. That's the thing about Bitcoin. I think it's going up for sure. This is what I'm betting on right now. That's also maybe makes sense then why I don't really care. For my investment, do I buy at 27? Do I buy at 20? Do I buy at 30 at the moment? Even if I buy at 30,000, I mean, if my target is hit here, that's still a 10x, right? Okay. Mr. Norway here, how do you find bottom and top resistance in the chart? Does it depend on the time frame you use, or what's set the rules for find top and bottom? There is no definite set of rules for something like this. This is why I always say it's a bit more of an art than a science. So what I usually do is, when I analyze first a new chart that I've never looked again, I go on a high time frame, maybe even something like a monthly frame. Well, that's a bit boring on Bitcoin. Maybe let's go to, for example, where do we have it here? The US dollar index. I zoom out, and then I just go from the top to the bottom and kind of try to identify where are zones of support and resistance. Okay, here looks like we were deflected a couple of times, here for sure, here for sure, here for sure. I'm just going to draw them in there, just as a first step, to kind of get a feeling for what is the trend phase we are currently in. Are we in a sideways trend, an uptrend, downtrend? If we are in an uptrend, where could be a new area of resistance, so to say? So this is something I like to do, just to get a general overview. Then my final decision, if I want to enter the market or not, is then, of course, made if we're talking about swing trades, so about positions that you want to hold on for a couple of days, for a couple of weeks, and so on and so forth, on lower time frames, where the monthly chart probably is not of much use. This is why I, for example, also created this Udemy trading course that I think I left the link also in the description, because I think it's so important to have a structured way how you analyze the markets. And this is really that you repeat everything over and over again in the same style, a little bit like an athlete, like a golfer or tennis player. And you'll notice they always do the same stuff before they hit the ball with a club, with a driver, whatever, before they start playing the ball in tennis, and so on and so forth. They have like kind of a routine. And I think it's important to develop this also, because this means, if you are able to develop this, that you can emancipate yourself from relying on other people. And I think this is, for me at least, the ultimate goal here of the Academy, that you kind of are able to make your own decisions. So it's a bit try and error by the end of the day, I'm afraid. Yeah, I want to talk about this too. Adam Polo, I see you focus on the crypto market. What about Forex? Well, by the way, I'm mainly a Forex trader. So that is a very, very large position of my portfolio. And especially the Japanese yen, very interesting at the moment, because you're absolutely right. It's going insanely weak. And I want to show you something here, actually. Or maybe this one, I still want to show you later. Let me load a layout here. So this is from my we have to wait until the signals are generated currently from my so-called sniper signal generator. So that's the one where you can get those buy and sell arrows on the chart also if you go in the description. And you can see it's going a bit crazy. Actually, since early May, we had like the price is really oscillating between extremes. So a lot of times when my system said "Hey, this could be like slowly the top of a chart, and you can see it kind of had difficulties identifying the total top, same with the total bottom. And at the moment, I have a feeling this is going to the extreme. So we had a couple of signals here to short. It was okay, you were able to get out of a trade break even. Here even more difficult, and I don't know if it's the same here. So it's really weird what is happening in terms of the Japanese yen at the moment. I mean, if we scroll out here a little bit, it's you really have to scroll out a long time until you come to this area here where we had prices like this before. And I think it has to do really with the stubbornness of the Japanese monetary authority. I mean, they have been having those super low interest rates for such a long time now. I think it began back then in the mid of 90s, if I'm not sure. So they had a deflationary environment, and then there's not been terribly much growth. And now if you have a currency like the US dollar especially, which pays an interest rate of around 5% at the moment, of course, the demand is going to be higher for the US dollar. Why should I buy a Japanese bond at the moment that pays maybe 0.25 to 0.5% when I can buy the US bond from the stronger economy that pays me 5% for 10 years or even higher? So this is what we are seeing right now. This is going to go into the other direction sooner or later again. So I wouldn't bet really on that the yen is going weak for super much longer. But then again, I said this already when we were here at 136. Okay, not so much difference right now. Certainly for me, one of the very interesting currencies to trade and to day trade even at the moment, currency pair, US dollar versus yen, but also very dangerous. There is this high volatility. And I kind of have a feeling that the market is a bit driven by people that are forced to sell Japanese yen versus US dollar. Great question, though. I really like that one. Good. Maybe we do two more questions. Don't worry if you ask your questions. And you did the screenshot. You are of course eligible for the giveaway for the 25 US dollars. So just because I didn't maybe answer your question here doesn't mean that you cannot win. Yeah, here and this is good. Thank you for the question, Petro. We see many. So Petro is asking. We see many people talking about meme coins like Pepe. Is it worth to trade them, or is it just gambling? And I saw a couple of you mentioning my last video where I explicit talked about meme coins. And if you watch this video, you probably can find out that I'm not a big fan of meme coins. Why not? I mean, the name already suggests that, yeah. And a meme, it's meant for fun. And if you want to throw like $100 at it, at something like this, for sure. I mean, go and knock yourself out. However, this has nothing to do with serious investments. And I mean, every influencer out there who is a little bit bigger, it seems like they are creating their own meme coins at the moment. And rest assured, if a meme coin like this pops up and gains some traction, the people who are earning money with this are the founders of a meme coin or the early investors. The early investors, however, are people that are investing before the, let's say, mainstream media, social media gains attention about this meme coin. And it was the same with Pepe. If we look at the chart of Pepe, I think actually I prepared a chart of Pepe. Here, you can very well see here also. No, it's like it's like once the media caught attention of it, we saw this huge rise when you saw all of those headlines out there. This guy turned or became a millionaire with $300 and so on and so forth. But then it's already too late. So once you start reading about it on the internet, on Twitter, on some of the weird cryptocurrency news sites that are out there, it's too late. Don't invest then anymore. If you really want to earn some money with meme coins, you need to analyze every single meme coin that gets issued newly. And with already over 6,000 of them being in existence, there are like dozens of new meme coins being released every day. It's very hard to keep up with that. And even if you then, like I said everything about this already on this video. Even if you end up investing in 10 of them, and let's say you throw $100 and on 10 of them, and 9 of them fail, which is to expect it, and 1 of them succeeds, well, you need a return on investment of 900%. So already almost 10x just to get back to break even. And this is very, very unlikely. So I think there is a way to get rich with meme coins. And that is if you mint your own meme coin, and if you're very good in marketing it, in bringing the attention of social media to it, then you have a high chance of getting rich with meme coins, in my opinion. Other than that, I don't invest in them. And if you are serious about investing, if it's not just gambling for you, I highly recommend that you also do not do that. At least if you don't want to lose money. Good, guys. All right, there are a lot more questions. I see that a lot of questions also about my price targets. I think I talked about those a lot today as well. I don't want to keep you awake so long, especially since it's Father's Day today, I believe. So if you are a father, happy Father's Day to you, and happy belated Mother's Day, of course, as well, if you're a mother. And yeah, thanks for joining me here tonight. As I said, if you have any questions, do not hesitate to reach out to me. So if I didn't answer your question, maybe after this video is now published on YouTube, post it again underneath the video. I'm more than happy to answer it then to my knowledge there. And yeah, I'm going to see you again next week, hopefully. Until then, take care, stay safe, and always use a stop loss. Bye.